Tesla is up over 3.5% today. And in this video, we're going to be going over this breakout, why I think the move to $400 will happen within the next couple of weeks to the next couple of months. We're also going to go over my position that I just took in Tesla. I ended up buying some 116/2026 $340 calls. And we're going to be going over exactly how I plan to trade this. If you don't know who I am, my name is Peter DiCarlo. I've been a full-time trader for the past 10 years. And my goal with this channel and my presence on X is to share with you guys how I've been able to grow my fund to over $4 million so that you can avoid the same exact mistakes that I made and, more importantly, learn from them. Now, we've been watching this squeeze and potential breakout on Tesla for the past couple of months. Before we get into this specific setup, I want to show the macro structure of Tesla and go over why this breakout would most likely happen to the upside. Then, more importantly, we're going to talk about how I got shaken out of this position last week and what I could have and probably should have done differently. Now, if we move out to a weekly time frame for Tesla, you are going to notice that even though price action has been squeezing here for the past couple of months, that market structure is still and has been bullish. We have been saying this dating back until February and March, when Tesla was falling off of a cliff and had dropped nearly 40 to 50% in just a couple of months. Many people were dogging me in the comments, which I completely understand, because if you don't know market structure, you would say to yourself, how is this bullish? How was this sell-off still bullish? Now, if we go back and look at the bar replay, you will see that the reason it was still bullish is because price action for the past year was breaking out, making a higher high. And when it would pull back, it would not pull back into a lower low. It would pull back into a higher low. Price again would break out, pull back into a higher low, broke out massively after the elections and was pulling back into what would most likely be a higher low. You have to understand, when we're looking at bullish structure, it doesn't have to look perfect, but it's normally going to move like this: a series of higher lows and a series of higher highs. Now, our goal and what we want to do is focus on getting in on these higher lows. These higher lows are areas of discount, and we use a Fibonacci retracement in order to find these levels. These are called smart money zones and institutional buy zones. So if we go back and we look at Tesla during this time, you are going to notice that if we take a Fibonacci retracement from this low here on August 5th to that all-time high at $489, that our smart money zone lines up to perfection at $237 to about $252. Now, I explained to you guys in all of our free courses down below how to actually draw these smart money zones, but these work and work very well because institutions are getting an 80% discount on the bullish structure in just a couple of months. And what we mean is not 80% as far as the actual underlying asset, but 80% of that range. From that low to that high, we retraced 80% of that move. So if you were an institution who was buying Tesla back here in October of 2024, you doubled your money, and now you get to buy Tesla again right where it was prior. Now, something else that's very important to notice here is going to be this volume profile, or these gray bars on the right side of your screen. I have a free course that is going to be coming out for you guys in the next week or so, showing you exactly how to set this indicator up and use it. But essentially, this indicator is going to show us not how many shares were bought and sold, but where those shares were bought and sold over the past 150 weeks. And so these areas of wide volume, and more importantly, this red line, which is called our point of control, is always going to act as major support and major resistance. So this is why we were so bullish on Tesla back in March, because as price is pulling back into this support, we have a high confluent zone. And a high confluent zone, which would basically be 230 to 240, means an area where all of our indicators align into one area. From this point, price bounces right off of this point of control. We bounce nearly 25% in 7 days, and then the BX trender closes higher lows. And from there, price rallies. So now we understand that structure coming to today's time frame is still bullish, but price has been compressing since May. Now, one of the things that I am planning to change within my trading strategy is I am going to stop trading purely algorithmically off of the BX trender. The main reason for this is market structure, and exactly what we just went over in this video will outperform a purely algorithmic system 9 times out of 10. And if I look back at my returns and my returns specifically on Tesla, we did the most of our damage and the most of our returns using the structure and smart money zone system. The reason that I like to push a very simple system prior of just using the BX trender is because when the BX is green, it's normally a very easy time to be buying. And when it's red, it's normally a very good time to just be getting out of the stock. But the problem is it can cause a lot of false signals. Real quick, if you want to learn how to find these setups on your own and get access to the same exact indicators that I use, we built a free training system just for that. The link is down in the description, and over 20,000 other traders are currently using it every single day. Now, in order to stick to my system last week, I ended up closing out of Tesla when the BX trender turned red. I decided that I need to stick to the system. I need to make sure that I focus on being accountable to the community and accountable to the team. And so I took my losses. I ended up closing $52,000 loss on my Tesla calls for 2026. But if we actually move into this daily chart, and if we actually look at price action, we will notice that structure never broke. Remember, we were just talking about how structure occurs when price breaks out, pulls back to make a higher low, breaks out, pulls back to make a higher low. And if you look, we never once took out and held below any of these lower lows. And so if we're trading only off of the BX trender, then sure, that would have been a time to sell. But if we're actually using volume principles, smart money principles, then we would not have sold. And the thing that you have to understand is that the smart money zone, since it's something that is drawn by us, and a volume profile, since it is drawn by us, it cannot be incorporated into a trading system that is purely coded and purely algorithmic. And that leads us to where we are today. Price action is now pushed up into this resistance level. Now, I have this area right here highlighted on the volume profile, because remember, we said that when we have thick areas of volume on the volume profile, that it's going to be strong resistances and strong supports. However, when we have a thin area on the volume profile, this is where price action will break out or break down very, very quickly, because there is no volume here to reject. And so I believe that if Tesla can break over $350, this move up to 400 would probably happen within a week, probably 6 or 7 trading days once this resistance is swept. Now, something else that I want to note is that back here on August 7th, I posted onto X this massive unusual buying pressure that was coming into the options market for Tesla. We saw a whale or an institution enter with $7.2 million worth of in-the-money calls, $235 strike for an expiration of 12/19/2025. This was extremely bullish because of this this letter here at the end of the details. When you see _A, it means that price action came in at the ask. This means it's not somebody who is selling a covered call. They bought this. This is bullish. If you want to learn how to read this flow and interpret it for free, we have a free options flow mastery course down in the description. Since then, the stock has now rallied about 11%. And I think there's a very good chance that we're going to move up to $400 pretty soon. That's why I went in and I bought my calls today. Yes, I overpaid. Yes, I got shaken out of this position last week. Yes, I probably should have held because structure never broke down. But it's okay to overpay and get back into a position. It's okay to admit you're wrong, and it's okay to not trade things to absolute perfection. Now, as far as this position that I'm only in with about 75 to 80% of my planned position sizing. The reason for that is there is still a chance that price rejects here and comes back down to test 320 or 310. And if that happens, I want some capital to average down with at this support level in case we break out to the upside. Now, before we go, I want to share with you an example of this type of big breakouts that we can get with a thin volume profile by going back to one of the biggest trades that we've actually had on Tesla, which was back here in May of 2024. So if we isolate just Tesla and we go all the way back to May, we'll start in the middle of May to basically the middle of July. From this period, we had made and confirmed $451,000 in profits with a 72% win rate and a 6.99 risk versus reward. Now, what was happening at this time that caused this massive breakout and us to actually make this profit? Well, using the same exact principles that we just talked about, price action was squeezing just like it is right now. We had a ton of compression that was happening on this chart. We also had a big brick of volume on the volume profile. Now, as we said before, once this brick gets erased and we break over it, then the chances of us actually moving up into the next block and filling this thin area of volume on the volume profile is pretty high. And this type of breakout is probably going to not take multiple weeks, but maybe multiple days, because there's nothing there stopping that move to the upside. All of this pressure is being built and it has to release. You will notice that price ends up pushing through this resistance, sweeping that 190 level. And then within just 3 trading days, price goes parabolic, breaks out 24%, fills this thin volume gap on the volume profile. Now remember, since we filled this gap to the volume profile, this thick brick is going to act as a resistance the same way that this brick acted as a support. This is normally a time to not walk away entirely from a position, but begin to scale out, which is exactly what we did. You will see here, we started scaling out of this position and closing as of 7.5. So we made $414,000 and then didn't really trade this at all from 7.5 to 7.18. So here on 7.3, price hits that rejection. Price is compressing inside of this level. If we break this support at 230, we know that this is going to drain right back down. And that's exactly what happens. Price drains right through this support level. Price fades right through this gap and comes right back down into our support. Now, for those of you who take our Smart Money Mastery course, you'll also realize this is where the Smart Money Zone is, and price should bounce within this level, which is exactly what ended up happening. Now, will this happen with the current setup that we have right now? Who knows, right? At the end of the day, we don't have a 100% win rate, and we're never going to have a 100% win rate. But trading with these fundamentals is one of the most important things that you can learn to spot market structure, to spot discount ranges, to spot high areas of volume on the volume profile for strong supports and resistances. And my goal going forward is to go back to trading by eye. I taught myself and built my eyes and my skill set over the past decade to where I'm not just going to be focusing on only the BX trender. We're going to be taking that into account, but focusing on just the BX trender is limiting what we are able to do. I hope this video helped, guys. As always, from the bottom of my heart, it truly means the world to me to have your support, and let's see what ends up happening here.